Good afternoon. We're getting right down to business here, doing it live, doing more at 4 weekday afternoons, right after Guy Benson, and just before the 790 KBC News Blitz with Randy Wang at 5. Mottek On Money, live on the air, 790 KBC, streaming live online worldwide at kbc.com, and the on-demand Mottek On Money podcast, kbc.com, Apple iTunes, YouTube, all your favorite podcast platforms. Mixed finish today, mostly higher though, wrapping up the first quarter of 2025. The Dow coming in for a closing gain of 418 points, settling at 42,002. The S&P 500 moved up 31 at 5,612. The Nasdaq giving back 24 points at 17,299. In another seesaw session, the Dow did move higher. S&P 500 closed higher. The Nasdaq slightly lower. We're getting the readings here showing the benchmark S&P 500 had its largest monthly percentage drop since December of 2022, and we'll have the quarterly results here coming up at this hour. Taking the spotlight today, Newsmax shares skyrocketing 735% in their debut after the conservative media outlet's initial public stock offering, with individual investors handing the firm the best first-day performance since 2022. Newsmax stock closing at $83.51 on the first trading day as a public company that saw the shares repeatedly halted for volatility. Looks like the price of gold once again in the spotlight here, hitting a record high, posting a 19% gain for the first 3 months of this year, the largest quarterly gain on record. I'll be discussing gold later this hour with Barry STUPPLER, the founder and president of Mint State Gold at mintstategold.com, former president of the American Numismatic Association based right here in Southern California. Price of oil, meanwhile, ending the month higher. This as global supplies are in focus. Also, the Trump administration applying additional pressure on Iran. Of course, the tariffs also a big part of what's happening, with the president calling April 2nd Liberation Day. We'll take a closer look at what's expected there. The price of oil, meanwhile, is hovering at about $71.31 a barrel. Gold, by the way, at $3,157.60. Silver also along for the ride this year so far, just below $35 an ounce. Tech and consumer discretionary, the biggest laggards this quarter. Instead, the top sectors were consumer staples, financials, energy, real estate, utilities, among others. And Tesla has just wrapped up its worst quarter since 2022, suffering its third steepest drop in the company's 15 years on the public market. Well, joining us live now to talk more about all this is Bryan Perry at BryanPerryInvesting.com, senior editor at Eagle Financial Publications, author of the 25% Cash Machine, financial advisor, decades of experience at major Wall Street firms, currently chief investment strategist and portfolio manager for a New York money manager, and a longtime contributor to this program. Bryan Perry, thank you very much for taking the call here at this critical moment.
Well, it's great to be with you, Frank, as we close out the quarter here, and a volatile end to a volatile quarter it was. You know, the flip from relative complacency to acute concern, it's really quite stunning here, considering that the S&P hit an all-time high about 6 weeks ago, and here we are, you know, taking out the March lows today before we had a very sharp reversal here midday. There's just rumors flying around everywhere, but we're really not going to know where the country stands for the market and until really Wednesday here, because it seems as if the Trump administration is, they're going to keep everybody in the dark in terms of what they're going to apply and who they're going to apply it to and how big they're going to apply it. So with that said, markets are trying to anticipate that maybe the market has priced in a good chunk of this tariff risk. Again, I've repeated this a couple times, that tariffs really affect about 11% of total GDP. So call it, $3.6 trillion of a $30 trillion economy. And the market's reacting extremely negatively toward, any dose of this. So with that being said, all those other things that were campaigned on, like deregulation, tax cuts, M&A accommodation, that's all been put on hold here because the tariffs have really taken center stage at this point in time. So the business of whether this is going to become, a sell the rumor, buy the news event, I just, it's too hard to call. And yet you're starting to see a few tea leaves out there in the tech sector today start to turn toward the latter part of the session here. So It's interesting times because you've got a lot of machinations here, a lot of different price movements with targets for the S&P 500, from 5,400 to 6,500, and you just have a lot of uncertainty, and the market really hates uncertainty. We all know that, so it's a time to keep some powder dry, but it's also a time to also understand that it definitely looks as if the economy is going to ebb lower in terms of its growth rate. And so the rotation that you've seen in some of these defensive sectors is justified and I believe validated and credible. So, for those of us that have had, too much growth in their portfolios, aka tech, then using rallies to, certainly rebalance portfolios, I think is going to be a prudent move here going into the earnings season as well here. And we haven't really seen any major analyst revisions lower on a lot of the big tech names, oddly enough. And here we are coming into earnings season now. Starting in earnest next week with some of the big banks will start to report. I find that to be very intriguing, Frank, that we haven't seen a lot of downward movement in the analyst community for, drawing the numbers down here based upon all the rhetoric that's taking place around data center spending or a slowing of it, and all the different things with NVIDIA having gone through and the tariffs on chips and everything that's going to happen. Regarding tariffs, real quickly though, I think it's important to note that I think Trump was really expecting a lot of consideration here by the other countries and nations here to negotiate, and we're really right now. There's just what's happening here is Canada, China, Mexico, and the EU. They're resisting, the bulk of these Trump threats, and they're opting to impose retaliatory measures. So this is really what's led to this next leg down, where we had last Monday, markets were up thinking that there was some consideration and some concessions taking place. This is really going to, I think, we got to be careful here because Trump may come out, with a very heavy-duty set of tariffs up front with the idea that he's going to negotiate those down, as he did in the last administration. So I think that's how the table's set.
On the air live with investment expert Brian Perry, and the other big story, of course, gold at a record high again today and has seen a tremendous run-up since the start of the year, up, about 20% so far this year, up since the beginning of this year, and up 39% over the past year. We saw silver also getting a pop, up 16% since the start of this year, up 38% over the past year, and platinum also now above 1,000. It has seen a gain as well of looks like 13% since the start of the year. So that compared to so-called digital gold, Bitcoin, down 12% in the first quarter, but still up 25% over the past year. Give us your thoughts on the so-called analog gold and digital gold out there.
Well, we got analog gold is on fire, and it's just it looks a bit extended here because the dollar has stopped going down. It's starting to trade laterally, and I think that you'll start to see some profit taking in here once there's clarity on tariffs and we really kind of know what the numbers are. Because once we can get to the hard numbers of what this is all going to mean, I think you'll see some of that safe haven money come off of gold, even just for a trade. There's a lot of hot money in there, but there's a lot of central bank buying as well, just to hedge against fiat currencies, which have been losing value, because a lot of the global economy is in a recession. Regardless, so rates are coming down around the world. Ours should follow, based upon the fact that global demand is also coming in. So with that in mind, trade some, keep some when it comes to gold for sure. And I think a 10% portfolio position here is a prudent position to have in this particular, in the yellow metal. In terms of Bitcoin, Frank, I'm looking at a nice double bottom, higher low formation in the making here on Bitcoin, right around 82,000 and change, 83,000 here. It looks as if this is starting to shape up as a second leg of a double bottom, higher low formation chart pattern, which, for those technicians out there, that's kind of a golden situation for what should be a new move higher, and that will be based upon risk coming back into the market, aka Nasdaq, small cap, mid cap, because we found out very clearly that digital gold is not trading alongside physical gold, and so, but it's more tied to hot money, and so therefore, when that hot money, spec money, and momentum money comes back into the market, and probably going to see some of that coming into earnings season here, because we haven't seen a lot of earnings warnings coming out by these big companies at all. So whether they're holding that and they're going to sandbag the market, or whether that's just business is pretty good, we could see a move back in for a lot of money flow back into Bitcoin here going forward here as the market finds its legs. And I think today's move today was showing you that trading at 16, 17 times earnings going forward here, the S&P 500 is starting to look like it's getting fairly priced.
On there live with Bryan Perry, investment expert, and Bryan, getting back to the what's going to be the big event this week, so-called Liberation Day with the tariff announcements. What do you think is going to happen on April 2nd here, coming up this week, and the market reaction we might see to whatever the president does decide to announce?
Well, I do think that the problem with tariffs is that it has a tug of war effect there, because if there's a retaliatory type of a trade war that takes off, and because there has not been any major headlines here coming into today, maybe there will be tomorrow, but as it stands right now, it sounds like everybody's digging in, and it's going to be high noon on the Wednesday. And so with that being said, if it means where we use a lot of raw materials and a lot of other people's imports to make things here that we send back out. And this is the part of the tariff situation that I think a lot of people haven't done their homework on here. I read a very, very astute piece last night that went a very long-winded piece, but it talks about all the the vicious cycle of tariffs because of how many thousands and tens of thousands of widgets and parts and things and services and all that takes place. So it's this global supply chain is super interconnected, and so therefore this is like a kind of a rolling thunder that can go through the supply chain here, where you have some big speed bumps, in certain things, and then other things are going to do well. So it's going to be really hard to call, because this is not cut and dry like it's being presented, Frank. It's going to be very convoluted and very complex. And I think this is really where, when people see that there could be more of a, some of the supply chains start to, become more jammed up, then I think that we'll start to see some movement on tariffs. But that could be 2, 3, 4 weeks out before people recognize that something's got to get done here in order to loosen up the system to make free trade a better running for us all.
It's also taking aim at the auto tariffs as well. Foreign cars going to be heavily tariffed, it looks like, to try to build up back up our domestic auto industry. So GM and Ford moving slightly higher after taking hits recently. Tesla, of course, very much in the spotlight as having a very rough quarter, and down again today, down more than 4, back to 259. What are your thoughts specifically on Tesla and the other auto names here at this point?
Well, Tesla, quite frankly, put up some very discreet news, earlier, middle of last week, actually. Registrations for new Teslas for February were quite strong. These are people that are registering these cars before they've been delivered. And I found that to be just, not shocking, but I was pleasantly surprised to see that there is a kind of a counter move. There must be some pretty good incentives going on at Tesla right now, because the incentive counts were for registrations were quite high, and Piper Jaffray put out a very bullish note on that, saying this has caught everybody flat-footed here when they saw these registration numbers come out. So it should be where they actually have year-over-year sales are going to be about even with last year, and everybody's expecting their sales to plunge from last month. So if they in fact come through and match numbers or beat numbers, then look for Tesla to work higher here. The stock does want to hold this level here. It's been they've tried to sell it down here a couple times, in the last couple of days. That very hard, especially with what happened over the weekend here. This this whole anti-revolution against the Tesla story and Elon Musk. But the stock came back and almost finished flat. So we'll see what those numbers look like next week. But for the rest of the automakers, they're in a world of hurt, Frank. It's going to be tough. And so, all these auto plants are going to get rebuilt here and all that. It's going to take time. Trump's talking like there's $3 to $5 trillion worth of reshoring going to happen, but that takes years to build these factories. So it's an incentive and it's a commitment. But what's happening right now is really And there's been hundreds of thousands of cars brought in before this tariff, from Mexico and Canada and overseas to kind of flood the market with inventory. So I think consumers are still going to find good deals on cars because this is all pre-tariff. But at the same time, I think Tesla may surprise. And if at any time Elon says I'm going to start going back and look at running the shop at Tesla, the stock's going to rocket higher, in my opinion.
At this point, Brian Perry, let me ask you the big question here. With the first quarter already now in the Wall Street history books, any specific places where you are putting money now and or taking it off the table?
Well, I've been, recent ads for accounts that I manage, full disclosure, and then those that I also recommend for newsletter subscribers is, Abbott Labs has been strong here, making a nice move today. BJ's Wholesale Club is breaking out to new highs here. That's been a very stealth move by one of these retailers where a lot of retailers have not. Fidelity National Financial (FNF) has made a nice move higher. The insurance providers, Frank, has like Lincoln National and AIG and Allstate and Progressive have all made very nice moves here and pushing higher.
If you're listening to sports,
if you're looking for an edge rusher, looking for a run stuffer, you're looking for a big-time player in the middle of your defense, you're in luck.
Mixed with pop culture, sprinkled with celebrity interviews.
You hated the title Everybody Loves Raymond.
That's true.
Is it appropriate for you to tell people to hurry it up?
It's appropriate on Curb Your Enthusiasm.
Bill Burr is here.
I want to know who you defeated to get that title as best dad ever.
I'm the Gonzaga of dads.
And you're enjoying the Rich Eisen Show podcast. Follow and listen on your favorite platform.
They are basically proxies for massive bond portfolios, and we've seen the 10-year come back down here to 4.1 and change. So they're benefiting well. They're domestic companies. They're pretty much tariff-proof, and everybody knows that insurance premiums have been going up steadily. In the utility sector, I've been buying more next year energy. NEE, Florida's biggest power provider there, and we've seen nice moves out of utilities this week, whether it's Duke or American Electric Power, PPL, Dominion. They've all been making very nice moves here higher. And I also like healthcare REITs in terms of again, domestic businesses. It's a long-term secular trend of people needing skilled care and living longer there. So I like the Sabra healthcare REIT, SBRA, paying a 7% yield, and is a nice way for people to have a high yield healthcare play. Coming off this CoreWeave IPO that came out this week is that fell flat. I think it got priced at 40, it opened at 39, went to 42, now it's 36. They have their big partner is NVIDIA in this whole deal, and they've got a lot of debt. So for those that tried to play this IPO, I'd be very careful because it looks like the next move is lower. And that's beyond that, most everything else looks pretty rinsed out, Frank, and should hold their lines down in this level here because, again, if earnings aren't getting really lowered by the analyst community in a big way in front of earnings season, then just maybe the economy's in better shape than most people think.
Very interesting. And, of course, Newsmax making a splash with its IPO today with so many media companies under pressure. This one seems to be running hot here at the moment with the stock rocketing, 735% in the IPO debut here today. What are your thoughts on that one? And by the way, the media stocks in general?
Well, if you're their investment banker, you're probably hiding somewhere in a bar because you didn't price that deal right. That was obviously very, very poorly priced here because the demand for that stock is just through the roof today. And interestingly enough, for the media stocks mostly, if you've got theme parks now like Disney, you're not doing that great. But there are others that are still doing well that have digital assets, digital media assets. Certainly, one of them is called Nexstar Media Group, and they own a lot of different TV and cable and streaming assets and things like that. NXST is the symbol. It pays a 4.1% dividend yield, and that stock it had really terrific earnings and sales, and the stock ran from 150 to 185. It's pulled back to 179 here today. Really, that's an outlier against what has happened here with Meta and other types of digital assets, which everybody's worried that advertising is really going to seize up here, and that would affect Amazon and affect Google and certainly Meta. But again, we'll see. No one has said boo about advertising revenues and pull on things like Instagram and TikTok and things like that. So we just have to see how this plays out. But I think the media stocks, if you don't advertise, you're not going to sell anything. So there's probably some discounting going on, but I think the volume is still there, Frank.
All right, terrific, Brian. Well, thank you very much for taking the call to wrap up the first quarter, and look forward to many more conversations in the second quarter and beyond. Brian Perry at BrianPerryInvesting.com, senior editor at Eagle Financial Publications, author of The 25% Cash Machine, financial advisor with decades of experience at the major Wall Street firms, and currently chief investment strategist and portfolio manager for New York Money Manager. Brian, it's always great to have you with us. Thank you very much for taking the call here this afternoon.
Always a pleasure, Frank. Thank you.
Thanks very much. And out to the freeways we go, and we'll have a wrap-up on the quarterly results here in just a moment. Let's get the latest on your ride, first of all, here in 790 KBC. Mottek On Money continues, 790 KBC. The first quarter of 2025 now in the Wall Street history books, and it was a rough first quarter, very volatile, although we did see a record high set, as was mentioned, by the S&P 500, then a pullback. The Dow today fell it was up for the day, but down for the quarter big time. Dow up 418 points today at 42,002. The Dow was down 542 points, or 1.3% for the quarter. The Dow was down 1,839 points, or 4.2% in the month of March. Today we did see a bit of a rebound, but not enough to erase the earlier losses for the month and for the quarter. The S&P 500 sliding today. Well, for the quarter, down 270 points to finish at 5,611. And by the way, the S&P 500 has just recorded its largest quarterly percentage drop since the third quarter of 2022. Today, we did see the S&P 500 end the day slightly higher in a seesaw session. The benchmark S&P 500 was down more than 342 points, or 5.8% for the month of March. And the NASDAQ, this is the tough one here, dropping more than 2,000 points for the quarter, down 10.4% for the quarter, settling at 17,299, recording its largest quarterly point and percentage drop since the second quarter of 2022. The NASDAQ gave back 1,548 points, or 8.2% in the month of March, posting its largest monthly percentage drop since December of 2022, and it was down just about 24 points today. So we saw a mixed picture across the board today, with the NASDAQ closing lower by 24 points, S&P 500 of 31 today, and the Dow gaining 418 points. The big story, gold. We'll be talking more about that coming up in the next half hour. Gold at another record high today, right now hovering at around $3,157 and change. Silver has been along for the ride this year, right now hovering just below $35 an ounce. Bitcoin, let's hit on that one, 82,335, down slightly here at the moment, and down 12% since the start of the year. Ethereum has taken a big hit at 1,824 right now, down 44% since the start of the year. And now the latest news on 790 KBC. Mottek On Money continues, 790 KBC. Head-spinning first quarter of 2025 in the financial markets. Worries about tariffs and the economy sending the S&P 500 and NASDAQ to their worst quarter since 2022. The Russell 2K Small Cap Index, by the way, dropped 10% year to date. It was off slightly today by about 0.5%. We are standing tall for small here in the face of all that's happening, and so is Holly Wade, executive director of the National Federation for Independent Business Research Center, where she takes the pulse of the mood out there in the small business sector, and has many years of experience doing that. Holly Wade is on the line with us live now. Holly, good afternoon to you.
Great to be with you.
Wonderful to have you with us, Holly. We had your president on recently, and we're following what's happening in Washington very, very closely, as you are. And certainly the word uncertainty is heard every 3 seconds here these days. First of all, give us your view of things, what's happening here as things impact small business in anticipation of another big announcement coming up here on Wednesday, the Liberation Day, and the tariffs announcement that President Trump is expected to make.
Yes, well, you're certainly correct that uncertainty is the word of the month, and I don't know that I've said it more in the last month than in my entire life, but that's basically where small business owners are right now. You know, we look at the questions that we ask in our monthly survey, and the level of optimism, at least as we saw in February, which was about a month ago, looking at how they were feeling about economic conditions, the optimism index was above the 51-year average for our survey. And so they were, not as optimistic as they were right after the election. It had come down a bit from there, but still optimistic. The most dominant part of that, though, was just the pure uncertainty of what to expect as far as his policy initiatives and how they were going to play out and possibly impact them in the coming months.
So among the small business people, maybe you can boil it down for us. What is the mood at the moment?
So right now they are waiting to see, as you said, Wednesday's a big day to find out what his policy take is going to be related to tariffs. And, there are some small business owners who have been impacted already, whether it's related to the 20% tariffs on Chinese imports or steel and aluminum. But the policy initiatives that he's looking to do on Wednesday are broader based. Not sure how broad or how steep those tariffs might be. So small business owners are kind of holding their breath, waiting to see what those look like as far as how they might impact their business. And once they understand kind of the lay of the land related to that, they'll be able to adjust business operations and move forward from there. Uncertainty is generally, a very uncomfortable place for small business owners to try and operate. They don't know how much or whether to invest in their business or in what capacity they should invest in their business. So this should offer a lot more clarity in how they can move forward.
And here's certain that one thing that's certain is the National Association for Business Economics making its voice heard on Capitol Hill. Based on our conversations with some of your leadership recently, I know you guys are pushing Congress to quickly help reduce some of the uncertainty for small businesses and the broader economy by preserving the 20% small business deduction and the Trump tax cuts being made permanent. That's certainly a big issue. Where do things stand on that front at the moment?
Absolutely. Well, that is our top policy concern and effort to preserve and make permanent those tax provisions that expire at the end of the year, and especially that 20% small business deduction that was so helpful to elevate small business owners, allow them to retain more of their money to invest in their business in that 2017 Tax Cut and Jobs Act in the first Trump administration. So that will go a long ways to have some certainty, in the near term, as far as small business owners not having to worry about having a tax increase come 2016.
If you're listening to sports,
If you're looking for an edge rusher, you're looking for a run stuffer, you're looking for a big-time player in the middle of your defense, you're in luck.
mixed with pop culture, sprinkled with celebrity interviews,
If you hated the title Everybody Loves Raymond,
That's true.
is it appropriate for you to tell people to hurry it up?
It's appropriate on Curb Your Enthusiasm.
Bill Burr is here.
I want to know who you defeated to get that title as best dad ever.
I'm the Gonzaga of dads.
and you're enjoying the Rich Eisen Show podcast. Follow and listen on your favorite platform.
So we're working with Congress diligently to try and move legislation through and get that passed and have it signed into law. So at least small business owners can take that off the table as far as concern about, pending expiration of those provisions that they've been able to take advantage of over the last number of years.
Yep, 2026 will be here before you know it. Already the first quarter of 2025 already in the Wall Street history books, and now there's some concern whether the Republicans will hold the House. Might there be a fly in the Chardonnay here? What is the outlook here as far as things passing in a timely manner?
Certainly. Well, that's certainly the concern because the expiration is going to come. And as you mentioned, 2026 is around the corner. So we're doing all we can to make sure both Republicans and Democrats understand how vital these tax provisions are for small businesses. So regardless of the outcome of some of these elections, that we can continue to move forward and pass these very important especially, the 20% small business deduction, regardless of the configuration of Congress, Most, or if not all, elected officials are supportive of small business. It's just kind of in the way that they support small business, and we want to make sure that they understand how serious this is for the health of the small business economy.
Charlie, we had a big event recently where the Los Angeles Business Federation did its recent survey of showing crime and homelessness certainly moving higher on the list of business concerns, along with taxes and regulation, of course. Anything else that's striking you at a national level that's top of mind for small business people nowadays?
Well, certainly the labor market is a challenge for a lot of small businesses, whether it's related to just being able to attract candidates for those open positions that they still have in record high levels, or the compensation, increase in compensation pressures that many of them are still feeling. Inflation continues to be one of their top problems. Labor market continues to be a top problem, especially for some of those industries that are more labor intensive, including trucking, some manufacturing, but really residential construction is where we see the highest levels of open positions and challenges in attracting those to fill those positions.
That's very interesting. Well, Holly, thank you very much for taking the call this afternoon. We'll continue to track everything we just talked about very closely with you and your colleagues there. Holly Wade, Executive Director of the National Federation for Independent Business Research Center. Thank you very much, Holly, for joining us live here on Mottek On Money on 790 KABC. Mottek On Money continues 790 KABC. Gold taking the spotlight as a big winner in the first quarter of 2025. In fact, gold price is selling at a record high again today, posting about a 20% gain in the first 3 months of this year, the biggest quarterly gain gold has ever seen. And joining us live now to react to this exciting news is the one and only Barry Stuppler, the founder and president of Mint State Gold at mintstategold.com, former president of the American Numismatic Association, one of the nation's foremost and most recognized rare coin experts and industry advocates, who happens to be based right here in Southern California in the San Fernando Valley. Barry Stuppler, thank you very much for taking the call on this big news here this afternoon.
Great day for many of my clients, and as they watch gold go up and then up and then up again. And right now we're looking at the spot price of around $3,126, an all-time record high, and it's being fueled by a lot of issues that will probably drive it a lot higher. Just recently, Goldman Sachs revised their year-end estimate. It was originally 3,300. They've taken it up to 4,200, and they think it will be 4,500 within the next 12 months. And I thought I was a predictor. I was originally looking at 3,500 by the end of the year, and obviously that might be a lot lower than what it closes at. But the big issue is what's fueling this rally. And I talked to a good friend of mine who's a trader in London right now in the middle of the night, because he calls me every time gold sets a record high to let me know what's going on. And he sees a lot of buying, investor buying, institutional buying, central bank buying, and it's all fueled by, you've got two wars going on, both in obviously in around Israel and through Russia, and plus you've got the issue of the tariffs. And that's what's really scary, because he's thinking there could be a full-blown trade war. When President Trump announces the tariffs on tomorrow, not tomorrow, Wednesday, when he announces it Wednesday, he thinks if they're a lot worse than what originally predicted, this could start a trade war with other European countries raising their rates on us, and it could get really ugly, and that's why a lot of them are running for gold. And it's just an interesting time right now when you see so many buyers, particularly outside the United States. Most of the gains have been in the Middle East and in Europe, not necessarily the demand in the United States. I don't see as big a demand as he's telling me is going on in Europe, in Americas, because they're still having a hard time getting their head around $3,000 gold, when most of my clients bought gold, like 2 years ago, 5 years ago, 10 years ago, when they could have bought it for $1,000 or $2,000. They're reluctant to come in and pay over $3,000. So it's just an interesting time right now.
See it tonight. Read about it tomorrow, but hear it now on Mottek On Money, on the air live with Barry Stuppler, the founder and president of Mint State Gold at mintstategold.com. Those are some very interesting predictions you just shared with us among the big dog on Wall Street there. So we're going to keep a close eye on this. Of course, gold traditionally has been an inflation hedge, and the expectation here, Barry, and maybe you could tell us how you're explaining it to your folks, is that the tariffs, it's feared, will fuel inflation, and that's certainly one main reason why gold could be seeing this dramatic increase this year, right?
Yeah, that's one of the many reasons for the sizable buying we're seeing is obviously the tariffs will cause a trade war. A trade war will lead to higher inflation, and obviously inflationary issues are obviously going to be very bullish for both gold and silver. Silver, believe it or not, has been disappointing. With gold at this level, we should be seeing silver at $40 an ounce, and it's having a hard time staying over 34. But I think at one point in the very near future, we'll see silver move up a couple dollars because it's definitely tracking at 88 ounces of silver to 1 ounce of gold value. That's just ridiculous, but we're seeing it, and I've lived through my life seeing this type of inequity, and when that happens, it generally, when it reverses quickly. So a lot of my clients who own gold, who are thinking about selling, I said, fine, sell a portion of it, maybe pick up some silver, and if you don't need the money, just keep the gold because it's definitely going higher, or use part of it for silver. So it's just interesting. We're getting some selling outside of my clients, but not sizable amounts. Occasionally, we'll see some gold bars. Costco that sells gold bars does not buy them back. And since they don't buy them back, people who bought gold bars a year ago that have a sizable profit want to be able to sell them and take their money. So we recommend contacting us as opposed to going to a pawn shop where you might not be happy with the price.
Very exciting time here. Platinum, by the way, above 1,000 here. At last check, 1,027. A quick thought on platinum.
I continually have not recommended it. It just isn't performing like it should be. I mean, platinum realistically should be at least the price of gold or higher. But over the last, let's say, 4 or 5 years, platinum has been very disappointing, and until such time as it turns around and starts showing some strength, because every time gold goes up, it goes over 1,000.
Barry, I'm sure you'll be getting some more calls from London tonight, so thank you very much for taking the call. Get some rest. It's been an exciting and busy time for you. Barry Stuppler, founder and president of Mint State Gold at mintstategold.com, former president of the American Numismatic Association based right here in Southern California. Live with us here on Mottek On Money on 790 KABC.
Hi, I'm Joe Salciha, host of the Stacking Benjamin Show.
You want financial independence, don't you? You want to know how all this stuff works instead of these little sound bites?
Listen to some finance people on the radio, and they're like, oh, you're stupid.
Because people fall in this trap all the time.
You don't deserve to have money.
You're buying a lot of air.
Interest sucks.
Oh, the horrors. You never knew personal finance could be this fun.
Subconsciously, I now feel rich.
Oh, geez, like, I'm out of here. Revolution over. We won.
Yeah. Deuces, everybody.
Stacking Benjamins. Follow and listen on your favorite platform.